there is slowdown at 100%. Economic slowdown is also at 100%. Rolling recession, right now, our probability is 44% for this year. Hard landing recession probability right now is 0%. Stagflation probability is 0%. So let's go to the CAPE distribution and see how it looks. We have a CAPE S&P 500. Let's go to the distribution. Okay, so most of the companies are below 30, but there are a lot of companies that are over 30 and 41 companies that are over 100. But this is for the whole S&P. Let's go and see how different sectors look. First one, healthcare, 61 companies. We have 14 between 10 and 20, 13 between 20 and 30, and 7 between 0 and 10. So it means more than 50% is below 30. And above 100, we have 5 companies. Just a little bit under 10%. Let's see. What do we have here? Okay. And Eli Lilly and Company, 133. Intuitive Surgery, 123. Dexcom, 150. Boston Scientific Corporation, 110. Insulet Corporation, 319. That's a lot. 319 is a lot. Let's go to the next. Consumer cyclical, 54 companies. 3 between 0 and 10. 14 between 10 and 20. 11 between 20 and 30. 25, 8. So this means around 50% below 30. 10 between 30 and 40. And this one looks not so bubbly. 3 between 0 and 10. Ford, 7.1. Yeah, that's really low. What? 7.1? Ford, 7.1. Yeah, I mean, Ford's CAPE ratio is really low. It's really, really low. I mean, it was highest in 2011, 27.9. But since then, it's price hasn't changed that much in the last 15 years. It has been around, but 10, okay, around $10. And right now it's still $10. This means that CAPE was going down. So earnings are going up. It's really interesting. Let me see here. Earnings, price to earnings is also around 10. And the earnings, $6 billion. 3 billion. Okay, I mean it's been constant. It's not changing a lot. Let me see here. Dividend KFD is at 14, and this is really good. It's really good. Price, yeah. I guess that people are losing confidence for some reason, but I mean, it looks good. Maybe they are not innovating, so people are not innovating like some other companies are. But yeah, it looks good. Let's go back. Where were we? Consumer cyclical. Oh yeah, I was looking at this. General Motors is also here at 8.4. I mean, this is really low. O'Reilly Automotive 3.7. What? There's something wrong here. No dividend. Jesus, price has been going up. Wow. So in the last 10 years, price has gone up from 16 to 90. The keep hasn't moved a lot. This means that earnings have been going up. Extra earnings. Let me check earnings here. Earnings per share. Earnings per share also have been going up. Where are earnings? Up here. Oh yeah, they've been going up a lot. So in 2015 we had around 800 million, and now it's around 2 billion. Yeah, so earnings have been going up a lot. The price has been going up. But earnings have been stagnating here. But still, KP is low. 3.4. It's really low. Let me see here. Yeah. Automotive aftermarket parts, tools, supplies, equipment, and accessories. Yeah. And from this company looks really cheap. Okay, so let's go back. So those were consumer cyclical. Let's leave industrials. We have 1 between 0 and 10. We have 10 between 10 and 20. And we have 27 between 20 and 30. 3 above 100. Let's see the one that's below 10. Southwest Airlines, 9.9. P at 40. So yeah, it's really low. I mean, the cape has crashed. This company has become really cheap. Even though the price hasn't crashed really a lot, cape has, meaning that earnings are going up. Okay, well, not that much. They've been going down here from 3 billion down to 500 million. So Okay, so earnings did go up between 2012 and 18. They went from around 200 million up to 3 billion. That's a lot. That's a lot. And it's first in 2020 that they started to go down. And that's why so Cape jumped here in 21. And that's, I guess, because they had a period here without any earnings at all. So Cape went up, and it crashed again because they still have a lot of earnings compared to the price, and they are paying dividend. Actually, they're paying a lot of dividend. Cape D is at 50. A lot. Maybe not a lot, but they are paying dividend. Price to book value 2. Gee, a lot of book value. A lot of dividend per share here. This looks like a good company. So price was around 65 in 2017, and right now it's 34. So it has gone down by half. Okay, COVID took it down, but it recovered, and now it's going down again. Interesting. Okay, let's go back to the distribution. Industrials. Let's see also a list of 10 to 20. 3M, 15. Delta Airlines at 10. FedEx, 15. All these companies, look at margin, 18. P 18. Interesting. Okay, so P is going down, went from around 30 down to now at 20. Oh, it's below 20. Earnings are going up, and there is a lot of earnings here. They are at 5 billion. Interesting. Okay, so let's go back to the distribution. Okay, so let's go look at technology. 79 companies. I mean, you can see here the biggest bar here is Cape above 100. Yes, this is what we call a bubble. 21 companies above 100. These companies are pretty new companies. NVIDIA, 319, 61. Earnings are going up, but it will take a lot of time and a lot of more earnings before Cape goes down for them. They have a software monopoly. And this is why they are dominating. But software can be someone else can write software that can compete, but it will take time. So they will probably continue to have the dominance. But question now, will they be able to take down this value into the normal territory, which is below 30? It will take decades. And of course, price can go up during that time. So over 119. A lot of companies here. Technology bubbly, bubbly, bubbly. Okay, we have basic materials. Okay, so they don't have anything above 60. And most companies are from 0 to 20. Yeah, so this is what we call normal. Energy. Also, most companies are between 10 and 20. Some companies do go up to 100. One. Financial services. Okay, most of companies are between 10 and 20, so there is no bubble here. Three companies between 0 and 10. Let's check them out. 8.6, 9.9, 8.7. Prudential Financial Corporate Inc. Cape around 3. And earnings here. Earnings 3 billion. 3 billion. Yeah, they have a lot of earnings. Book value is really, this company looks cheap. The price hasn't moved for 8 years. 8 years ago it was around 100, and now it's around 100. So it's been going up and down a little bit, but okay. What else do we have here? Financial service, communication services. Yeah, there are a lot of companies here above 100. So this is bubbly. Let's see what we have here. DoorDash, Live Nation Entertainment, Netflix. Netflix is at 158. P ratio of 56. They will have to have a lot of earnings to justify this. A lot of more earnings. So let's see here. Where are the earnings? Yeah, they've been going up. So maybe they will continue to go up. If it doesn't, the stock will crash. Escape was at 800 2018, and then it went down. It went down a lot during 2020, and now it's going up again. But this is because the earnings, they just went from around 2 billion to 9 billion. Yeah, that's a lot of earnings. But to justify P of 180, they have to have a lot of more earnings. Earnings have to go to 20, 30 billion. It will be difficult. It's not impossible, but it will be difficult to justify this price. Okay, so let's go back. What else do we have here? Consumer defense. No bubble here. I mean, you can see it once. There is one company but most of the between 80 and 90, but most of the companies are between 10 and 30. So this is healthy sector. Of course, recession would affect it a bit, but not a lot. One company between 0 and 10. Let's take a look. Tyson Foods, 8.6. P ratio, 23. Hmm. Well, let's see here. Let's go to the top here. Ah, the keep has collapsed here. It has collapsed since 2016. So earnings must be going up a lot. And they did. They went from around 800 million to 2 billion. And now they collapsed to 800 million. But still, even, I mean, they collapsed. How this can affect. Still, I mean, earnings can come back. Let me see this. What is this? It operates as a food company worldwide. It operates through four segments: beef, pork, chicken, and prepared foods. Okay. Okay, so they are operating with food worldwide. Founded in 1935, headquartered Springdale, Arkansas. Yeah. The question is, will earnings come back? If they do, this company will go up. Okay. Let's go back to the distribution. Where were we? Technology, basic materials, energy, financial services, communication services, utilities. Utilities. This sector is totally. Oh, this is a base stable sector. or most companies between 10 and 30. Medicine, Dominion Energy. Okay. Real estate. Yeah, real estate looks a little bit bubbly because they have four companies above 100. Yeah. Some companies between 10 and 20. Let's see here. 16, 17. Equity residential. Let's see here. Why is it going on the bottom? Okay, so the Cape has been stable around 20. And now it's at 17. And earnings, yeah, earnings have been stable since 2006. Yeah, looks good. They're paying dividend. They're paying a lot of dividend. KD at 16. Oh, that's a lot of dividend. So this is really good. It is focused on the acquisition, development, and management of residential properties located in and around dynamic cities that attract high quality long term renters. It has 305 properties consisting of 78,000 apartment units located in Boston, New York, Washington, D.C., Seattle, San Francisco, and Denver. Stable. This company looks stable. Yep. Let's go back. Real estate. Okay, so I'm going to end here. Looking at these distributions can be really helpful because you get the feel what sector can be in a bubble and what sector feels normal. Of course, when we go back to macro right now, there is a 44 chance we are entering a rolling recession. It is going up, but this will take time. So if we do get in a recession, it will take a year, maybe two, before stock market reacts. Of course, technology, especially, is in a large bubble, so it would collapse. But this will that would, I mean, right now it will take time. It's not. This is like a graph from 1960s today, so it doesn't happen often that we get a recession. Okay, thank you very much, and we'll talk more about when a possible recession can occur next time.